In this video, we're going to take a look at the housing market and an update for 2026 in Canada, specifically where the movement is happening, why it's happening, and where the market is going to go continuing in 2026 and on to 2027. So the main factors here revolving around why the market is going down that many people don't seem to know or just haven't been following. So here, if we take a look at the whiteboard, you can see the pattern in which the interest rate was in Canada and how it has been declining up and from March 2025 until March 2026. So right here at the beginning from March 2025 to July 2025, that interest rate was 2.75%. In September 2025, it was 2.5%. And then October to March 2026, it stayed stagnant at 2.26%. So there were not any further rate cuts. And to see why this is important is because our economy hasn't been doing so well. Of late, we've faced economic challenges, and the world as well. We're not just the only ones that are facing the challenges that's happening right now with, global wars and stuff like that. That's occurring. But our economy has essentially been doing worse while our interest rates have been staying the same. So they're not cutting it anymore. And now there's a worry that they're going to increase interest rates moving forward. Why this is not good for us and not good for our housing market is because our real estate are facing some very large lows in the past 5 years. So Vancouver, Toronto, all the major cities and the suburbs within those cities have decreased significantly in price. So from 1 year to the next, it's about 5 to 7% of a decrease. So this is for housing, apartments, townhomes, etc. So each year it's going down. So in 2025, it was going down, 2024 went down, and now in 2026, it is still going down because that inventory that we have is just flooded with a lot of inventory in the housing market and there aren't enough sales going. That is what's essentially fueling this deflation of these housing prices, okay? So the housing market has been going down 5 to 7% each year. 2026, it continues to go down. Our interest rate has not been cut more in 2026, actually since September 2025. It's been stagnant and with a potential for interest rates to go up. What will happen then is it'll cause more problems to our housing market. In theory, less people will be able to purchase these homes. So the inventory is going to continue to go up and sales will continue to go down. So inventory is going to continue to drive prices down and we could face a potential bubble, right? So right now we are in that bubble and it may burst and cause what we had happened in 2008 with the recession in the United States. So you can see that unless these interest rates go down and they start cutting again during this economic time, we're facing a probability that there will be a real estate crash in Canada, which would then cause, a full economic crash. Real estate is a huge part of our sector for growth and our economy. We wouldn't be able to handle a crash there. So we also need to keep in mind the rate of unemployment that has driven also to a high of recent past.